Over the last year, there has been a lot of talk about the subject of inflation, and I've done a series of videos on this. If you want to go back and you can look at kind of my description of the kind of mechanics of hyperinflation and why what we are seeing now isn't and is almost certainly not going to be hyperinflation. That being said, at the time I mentioned we could have maybe 5 to 10% inflation, and we're seeing more or less somewhere around that range, some quite high numbers by historic standards over the last, I don't know, 10 years or whatever. But that being said, also not seeing, really mind-blowing inflation. The question I think that is relevant right now is the inflation going to continue? And in this sense, I wanted to dive into a little bit of the mental model of how inflation works, what inflation is, et cetera, because I think it's largely misunderstood. So I'm going to discuss that. I'm going to look at it from both the short-term perspective, the longer-term perspective. I'm going to look at it the US. I'm going to look at it with some other countries, and we're going to dive in. So before we do that, if you haven't already, please smash the subscribe button, nail the notification bell. Make sure you don't miss out on any of our future videos. If you'd like help at all with subjects of international structuring, so where to go, how to set yourself up, what residency permits to get, how to structure your taxes, or you'd like to stay in your home country and optimize your tax, set up companies abroad, international banking, etc., please reach out to me. You can book a call, calendly.com/Michael-Rosmer, link in the description below, or send us a message through our websites, offshorecitizen.net or offshorecapitalist.com. Okay, so inflation. Let's see here. What can I say? So here's the first question, basically, is what is inflation? And this is a really, really important question that isn't actually as self-evident as you might think. And the reason is we know that there's inflation happening because prices go up, but is inflation simply prices going up? In other words, there's lots of different cases where we see prices going up. Is that inflation, right? And so usually what we think of as inflation is something associated with money printing. If you look at the Austrian School of Economics, they literally define inflation as money printing. Now, this is quite different than some other cases, and I do think that they're wrong about that, because what people really care about is prices going up. They don't really care about money printing. They care about how it affects them, right? So for our purposes, we're going to observe that, hey, listen, CPI, which is the measure of inflation, is a measure of how much prices go up. And again, I've done some videos about kind of the flaws of CPI and things like this over time. That's a whole other conversation. But we've definitely seen this happen over the last, several months, right? Price of commodities, first of all, things like lumber, way up, might as well hodl lumber almost as much as Bitcoin. You definitely can see the prices of houses going up in a lot of different places. You can see the prices of all different vehicles, gasoline, etc. Like pretty broad-based price increases. And I think this is one of the ways that people think of inflation versus not, is if it's broad-based, they think of inflation. If it's not broad-based, they don't think of inflation. Is that accurate? I mean, I think the point is that it happens in areas that, like if you go to Zara, have prices gone up? If you look at Netflix, have prices gone up? So it's like, the question is, how do the areas matter to you? This being said, the basic thesis and the comment that I hear from a lot of people, which I think is actually fundamentally inaccurate, is that there's been a lot of money printing, now there's inflation, money printing causes inflation. And I discussed previously how prices rising is not actually driven entirely or even maybe at all by money printing. And the best analogy for this, for understanding of it, is simply to ask, okay, how is it that Japan increased their debt to GDP dramatically, way beyond anything that countries like the US or Canada or most of Europe, et cetera, have done, and haven't seen inflation at all? In fact, they've struggled with deflation, right? You have to wrestle with that basic question. And you can see people like Michael Burry, very famous investor, famous from The Big Short, who, good investor, et cetera. And so if he says something, it's worth listening to. I've looked at his comments on, he thinks that we're going to see quite a lot of inflation. And his argument is the difference between Japan and the West is they didn't put the money directly into the hands of the people. I tend to disagree with this theory, and we're going to dive into why. So I think most of the people watching this channel are probably business owners, entrepreneurs of some sort, freelancers, digital nomads, investors. And so the most basic question to ask yourself is, okay, hang on, under what circumstances would I raise my prices, right? Because there's basically just a whole bunch of actors in the economy that are like us in one shape or form, right? And I think the typical reasons, there's two reasons. Number one is your costs go up, right? So, okay, costs go up. Now we can break down why do your costs go up. That's a whole other conversation. But the other one is because your demand exceeds your supply, okay? And in other words, if I'm a hotel and I've got 60% vacancy, I'm not going to, it doesn't matter, money printing isn't going to change or supply of money or any of this is not going to change my pricing on my rooms. What's going to change my pricing on my rooms is the fact that, hey, I rise from 40% capacity to 90% capacity. I'm like, hey, listen, you know what? We don't have that much capacity. We're going to increase our prices, right? Very, very common. And this is one of the reasons why you don't tend to see much in terms of price increases in something like Netflix, right? It's pretty highly scalable. And you'll see that across many, many different fields. At the same time, you see advertising rates go up on Facebook as more advertisers come in and there's a limited number of slots, right? Very basic understanding. So if you understand that, then you can start to get a picture of what's going on here. And the real question, I think, is how long will, obviously we're experiencing inflation, what's the main driver of it, how long will it last? And my thesis is that it is principally driven by supply, not by demand. That is to say, supply and demand both play a role, but the equation that we have in the world today is principally, that's resulting in inflation, is principally a supply side equation, not a demand side. Okay? This is going to be super controversial. Lots of people are going to say, oh, no, blah, blah, blah. But I invite you to kind of like think of the mental model and go back and say, hey, listen, why is it that more money being printed would cause inflation? Right? In other words, why would people raise their prices? Right? Because why they would raise their prices is, again, because the price of things go up, therefore they need to in order to make it work, or they have sufficient capacity that's being exhausted that allows them to say, hey, listen, you know what? I don't have that much capacity anyway, so I might as well raise my prices in order to meet the demand. For example, I have a company in Canada that I'm involved with. We buy vehicles in Canada and we ship them around the world, right? And okay, great. You buy vehicles in Canada, you ship it around the world, wonderful. Well, you notice that the price of vehicles has gone way up. Why is that? Well, because there's a shortage of vehicles, right? Now, you can say, okay, well, why is there a shortage of vehicles? Is that because there's an increase in demand or a decrease in supply? There happens to be a shortage of chips in this particular case, so there's just not that many vehicles out there. So let's consider these two alternatives because it has a very different impact on the long-term effects of what we should see and therefore how we should influence our investing decisions and things like that. So I think that it's likely that inflation is short-lasted. And the narrative I would suggest has happened is you had lockdowns, right? When you had lockdowns, production dropped quite dramatically. At the same time as production dropped, demand for certain things dropped a lot. And when when you had decreasing demand, more companies dropped their production in response. We saw this with the price of oil, right? What happened with the price of oil? Well, people stopped traveling, they weren't driving, they weren't flying, etc. Therefore, the demand for oil decreased. Therefore, reserves started to increase. Therefore, they said, hey, listen, we've got excess reserves. We want to get rid of them. So the price plummeted. As the price plummeted, it made no more sense for people to produce. So they went and started shutting down oil wells. They weren't doing exploration. They weren't doing drilling. They weren't doing all these different things, right? And, we saw price bottom out at negative $34 a barrel before coming back, right? Now, what's the consequence of that? Well, the consequence is we haven't been producing as much oil. And because we haven't been producing as much oil, when you suddenly have demand start to go back up, then the supply side lags the demand side, right? It's easier to have people jump into their cars and start driving, jump onto planes and start flying, than it is to go out into the bush somewhere and uncap a bunch of wells and start getting them flowing. The time lag is just different, right? And as a result, you have these short-term supply constraints, and as that occurs, you end up with prices skyrocketing, or well, not skyrocketing, but going up quite a bit, right? Add to that the fact that people who've been kept inside for months and months on end are suddenly feeling like, screw this, I want to get out. I wasn't able to travel for a year and a half, a year, 2 years, whatever. I want to go somewhere. I'm going to get on a plane. I'm going to fly somewhere. All right. So now you have this pent-up demand, which is unleashed into the marketplace. Now, there is certainly some extent to which people have also had money from money printing, right? So that's occurred in two key ways. Obviously, people have been given stimulus checks, okay? So that's just like free money that has been there that wasn't there before. Okay, sometimes it was offset by decreases in people's wages, et cetera, but definitely not entirely, right? So you have this free money that's out there. Now, your ability to say, go and buy a new bicycle, to go take a road trip, to fly to Mexico, to whatever, is increased, right? So you have an unleashing of demand. But do be aware, that is a short-term thing, right? Unless they keep stimulus checks coming, which they might, right? They may say, hey, listen, we're going to usher in UBI. Seems like a really stupid idea to me, but they might do that. If they were to do that, it would change things. But if they don't, you have this kind of short-term progression before you exhaust those funds. They kind of work their way through the system, and then the demand dissipates, right? The other place that money came from is they pumped lots of money into the financial system, which inflated asset values. A lot of people made a lot of money, right? Because a lot of people made a lot of money, they have more disposable income available. Because they have more disposable income, now they're saying, hey, listen, I'm going to sell some stocks. I bought Tesla, I bought AMC, I bought GameStop, whatever. I have some cash. I'm going to buy a new car. I'm going to go travel. I'm going to whatever. That creates more demand. That one's probably a little bit more long-lasting because I don't see signs that they're going to stop quantitative easing anytime soon. I think they're going to keep pumping more and more money into the system because they politically can't stand the idea of letting things drop, okay? Not great, but that is the way that it is. Do note, though, that quantitative easing previously has not caused inflation at the consumer level, right? Which is very interesting, right? When they started quantitative easing in 2008, or whatever, was it 2008, 2009, something like that, they started it, and some people said, oh my gosh, we're going to have a bunch of inflation. We didn't have a bunch of inflation, right? Very interesting. I read some key economists at the time who said, hey, listen, this is not going to cause inflation. Here's why. Again, I explained that in a previous video, so you can go and check it out. Very, very important to understand. Okay, so clearly, if it's true that we had pent-up demand and that pent-up demand gets unleashed in a short period of time, you're going to have the swelling of demand is going to overwhelm the supply on a short-term basis, but that's going to get addressed, right? The other part of it, as I said, is this short-term production thing. I think the production problems are short-term because if you're a bicycle manufacturer and you have higher demand, what is your ability to scale up and meet that demand over time? It's obviously there, right? The bigger concern for companies usually is getting customers, not fulfilling demand. It's just more a function of time. Hey, listen, how long do we have to set up machines, to hire people, to et cetera, et cetera, et cetera. Maybe you get some extent whereby you have things like increasing minimum wage. Okay, that drives up costs. Maybe there's sufficient demand, so, some money goes into the financial system and some people have more money and they're like, I'm not willing to work for this much. So as a result, you rise wages a bit. So there may be some effects of that. But sustained increases in pricing, you wouldn't expect to see in that model. What you would expect, the model that you would expect to potentially see it is if you have, for some reason, continued sustained low production, right? That would be one case. Or the second is if you have sustained increased demand, right? And demand not just going up and then leveling off, but continually growing. And this is where it's worth noting that there's not been, that I'm aware of, any cases of high inflation when you have declining populations, which is really interesting, right? Generally speaking, where does more demand come from? It generally comes from increasing populations. Yeah, okay, you have to some extent industrializing populations who are consuming more, but we know for a fact that people in, say, Western developed countries, their consumption taps off at a certain point, right? So you think about something like food prices, you think about something like prices of clothing, right? Clothing, maybe a little bit less so, but food for sure is a really great example of the person who's making $50,000 a year doesn't consume that much less food than the person making $150,000, who doesn't consume less than the person making $1.5 million a year, right? So the consumption doesn't scale with the amount that people have. The consumption scales with the amount of people that there are, right? Very, very important to realize this distinction. Okay, if we think about it from that standpoint, we can say, all right, well, let's think here. Maybe people end up with more money, right? Maybe that happens because of the fact that you've got more money flowing into the financial system. We definitely have that, right? Where is that money going to go? Is that money going to go into consumer goods? Probably not so much. Probably not so much, because mostly people aren't that constrained. So the basic model that I think people misunderstand is people tend to think money printing causes inflation. I generally don't think that this is the case. I generally think that money printing enables inflation. And this is a really, really important difference, right? In other words, people are not going to spend beyond the range of affordability. Okay, that's just the reality. You will not spend more than you can afford because you just don't have resources to spend more, right? If the prices are going up, or if the forces that would drive prices up are not backed by more money to spend on those things, the prices won't go up past a certain point. If you now all of a sudden start giving people a lot more money, well, they can bid the prices up, but they're only going to bid the prices up to the extent that they meet their needs or meet their wants, their consumption. If their consumption is not rising proportionally, then you're going to run into a gap, which is why, once again, we'll see inflation in financial assets, because there's an unlimited ability for that to scale up, right? There's no limit to the demand. No matter how much money I make, I can always pour it into investments, into financial assets. So boom, it goes up. Likewise, I will probably redirect it to some very specific things like healthcare, right? Boom, okay, I can add to there. Maybe like luxury goods, there's these very specific scarce, it's the new, Bugatti, whatever, Chiron, whatever car, that there's only 100 of them in the world, and there's more people who can afford those 100, so therefore they can bid the price up. All right, that will happen. But broadly consumer-based, I do not see a strong argument in the current environment that you should see it. So what should you expect? In my opinion, what you should expect is we have a period of inflation. That inflation, like I said, runs probably 5 to 10%. It may last a year, 2 years. I suspect that highly likely within 2 years, we've worked that out of the system through a combination of pent-up demand easing out and people's and production ramping back up to meet basically to provide supply to meet the demand, right? And in that situation, you actually risk the opposite depending on how well just-in-time manufacturing gets handled. And that is, if companies think, hey, this is the new norm, people are consuming, I have a lot of demand for my bicycles, my cars, my widgets, my gadgets, my toys, my whatever it is that they're producing, right? If they make the mistake of believing that, they may over-ramp production upwards. And as they do that, and simultaneously the pent-up demand starts to decline, you may end up in a situation where we have an excess of supply and you actually see prices drop to account for that. Which makes to me a really interesting scenario where I think of possibly some people might be saying, hey, you should run out and buy things now because inflation is coming and prices are going to skyrocket. I think the opposite might be an argument. I think you may want to say, hey, I'm not going to buy anything now, because I may be able to get a discount on it 2 years from now. Not guaranteed, but it's worth considering how that would happen. So anyway, tell me what you guys think. I'm not really so much interested in, people can throw out ideas, but I think the more interesting thing is, what's the mental model? Show me the mechanistic forces which drive the situation in a particular direction, right? If you're saying, hey, listen, I think we're going to have this amount of inflation. Okay, great. Based on that, what is your base assumption in terms of the mechanics that will drive that change? If you say the opposite, if you say, hey, listen, we could easily go into a depression, we can see massive deflation. Okay, what's your argument? Tell me what you think the mental model is for how inflation works. I would love to hear if there's something that I'm missing in here. As I see it right now, this kind of informs my particular position on what to be doing with money, etc. So I hope that helps. I would love to hear what you say. Again, if you have questions or whatever, put them in the comments below. If you would like help with international structuring, going abroad yourself personally or your business, please reach out to me. You can book a call, calendly.com/Michael-Rosmer, link in the description below. Like the video if you like it. If you don't, please tell me why. And please share it with your friends. I'm going to see you guys on the next video.